Hey, good morning, everybody. It is Saturday morning. It's Mike, your co-host, one of your co-hosts of Saturday Morning Multifamily Unplugged. I'm joined this morning by my co-host, Carl Moose, who we lovingly call Moose. What's up, Moose? How's it
It's
going?
all good. It's all good.
How you doing today? I don't think you've ever done that. That's kind of funny that you gave the antler sign. Good for
That's
you.
yeah. No, I think I did it like episode 3.
Yeah, nice, nice. Hey, let me just do some housekeeping here and we'll dive right in this morning. Welcome, everybody. Glad that you are here today. We're here every Saturday morning, 10 a.m. Central Time. We're going to talk, we usually talk about multifamily, have a guest on, talk to somebody about the business, the industry, what place in the business they hold and what they do. Today, we're going to do a if you are somebody out on Facebook and you want to get on the Zoom call with us, let me know. Email me or direct message me, and we'll get you the link so that you can get on Zoom. We're going to have a bunch of people on this morning. As many want to join, a little bit of discussion. It's 9/11, so a little bit of memory around that, and we'll tell some stories and things like that. I want to just welcome this morning. And please remember, we always ask go to social media. Wherever you hang out on social media, you'll find us, whether it's Facebook, Twitter, LinkedIn, or Instagram. Whether it is Carl or myself personally or our businesses, Carl, you can find by your focus guy, and me, you can find by my core intentions. And today's show is brought to you by my upcoming or sponsored by my upcoming October the 14th, 15th, and 16th in Schaumburg, a live 3-day deep dive into multifamily. If you're coming, get registered. The room only holds 60 people. If you're going to be live, we're going to live stream it as well. So, hey, Carl, welcome this morning, man.
Yeah. You too, Mike. And you know what? Yeah, I was actually. I'm
Co-host,
actually was.
your co-host of Saturday morning.
Yeah, you got some.
Go
You
ahead.
got
I'm
some
sorry.
background noise, echo or something.
Yeah, I got it.
Yeah. So yeah, it's you're right. This weekend was. We decided not to have a guest per se, because of the, 9/11, and just have a conversation about that. And we'll get into that a little bit more. But yeah, it's something that you just think about every now and then. It's amazing. It's been 20 years, but everything other than that's great on my end. It was good to see you the other night to have dinner as well.
Yeah, we had a nice time last night. I sent that picture of us out to a couple of people, and I got like, hey, you guys look like you're having a good time. Where are you? And I said we went out for tapas, and you wouldn't believe the comments around that, but you know. Hey, we're joined this morning. Pat Gage is on. Pat, how are you?
Very good. How about yourself, gentlemen?
Good, good. We'll get to some introductions here in a minute. I know we've got Mark Brown and Larry and Tom out on Facebook Live. Good morning, guys. Glad that you're here. If you want to join us on Zoom, send me a link or a direct message, and I'll send you the link to get on Zoom. Alex, if you want to join us, you're more than welcome. You could go ahead and unmute, show your picture if you want, but you can join us too. And I know a couple other people are trying to get in. So, hey, Pat, why don't you tell people about yourself a little bit, where you're calling from, and how we connected?
My goodness, thank you. I appreciate that. I'm from Michigan, live in southeastern Michigan. Been here most all my life. And I've been in real estate for about 23 years. Started out in single family about 15, 20 years ago. I've done a lot of single family. I've done some commercial, retail strip, billboards, cell towers. And now, folks, in the last couple of years here on multifamily, as you can see from my backdrop, currently involved in 188 units in Tulsa on the passive side, and looking to take down our first property here in Iowa. So we're got the team together and kind of got it done. Now, how we met, I'm trying to think. I think I'd seen you on social media, and I rang with your story and kind of reached out to you, and kind of connected. And then we saw each other in person at the Windy City REI, and that was in Chicago, and that's 5 hours for me. But when I drove there, there was more people from Michigan than there was from Illinois. I had to go 5 hours away to find the people. So that was a good event.
Yeah, that was crazy. It was good that we ran into each other. It's always good to meet somebody. We always hang out with people on Zoom. We see people on Zoom. We talk to people on Zoom, but we don't ever really get a chance to get connected with people. So I'm glad we had an opportunity to do that. That was good.
Me too. Yeah, and that's exactly what another friend of mine said too. We've been on Zoom meetings almost for a year, and he finally, he moved back up here from Florida, and I said, let's get together. Let's have a coffee. I mean, it's we met at a Panera. I was like, oh my gosh, I can actually see you. It's different,
Yeah. Wow, Zoom is a mess here this morning. I think we're live. Can you guys hear me okay?
Yeah, we can hear you. Both you guys are frozen on my end. I don't know if you can see me or not, but
yeah, I can see you. Carl, you're moving. Hopefully I'm moving. And Mike was frozen there for a few. Yeah, there must be something with Zoom today because it is wonky. But no, we can hear you perfectly, Mike.
Yeah, well, that's interesting, Pat. So let me ask you this: what did you? How long have you been in multifamily?
I would say 3 years.
And what'd you do before? And then you were in cell phone and some of that alternative.
Yeah, some of the alternative. What we did, we had residential properties. Had about 100 rentals within the southeastern Michigan area here, together with my ex-wife. And then obviously when that went south, we had to break the company up. And then I went and found a W-2 job. So I had a lot of residential experience. And at the time, we were kind of dabbling in commercial as well. I've done notes, I've done a couple different things, and I've always heard of multifamily, right? And it was just something that I heard about it and just never really got really involved in it. And then taking a few courses and talking to a few people and got connected with the right network. Now it's a lot easier, right? So I can analyze properties pretty easily, but also have a team around me now of people like-minded, like Mike was talking about, that you can pass ideas off of and say, hey, listen, because you can fall in love with the spreadsheet, right? I mean, you can make the spreadsheet say whatever you want it to say, but it's that third party person that says, hey, did you think of this? Did you think of that?
Yeah, that's so key. I mean, part of what Mike and I do, I mean, me more so on the mindset side, Mike definitely on the multifamily side, is, it's that sounding board, right? It's that accountability to say, you know what, I tell me why, you're putting a vacancy rate of X in there, or a deferred maintenance number of Y in there, and it's that, and then it makes you think, because you're right. I mean, there's a human nature side to that. We want to, and you said it perfectly, fall in love. We want to get emotional. And I'll never forget one time when I was a banker, I had a guy come in, and he was looking at a historic building on the south side of Chicago, beautiful building. I mean, they don't make buildings like this anymore. And the guy was just in love with this building. And I literally had to tell him, I was like, I understand your passion and everything, but the numbers don't pencil out. And you want us, the bank, you want the bank to approve 70% LTV. We're not going to put 7 cents on every, or 70 cents of every dollar into this property, because it just doesn't work. You know what I mean? And
yeah,
I remember that. I'll never forget that conversation. At the end of it, I said, listen, I think his name was John or something, but I said, listen, John, I'm doing you a favor. You know what I mean? You're about ready to get married to this property that's not going to work out for you. And he finally saw the light. But yeah, you definitely don't want to fall in love with your spreadsheet or your buildings.
Yeah, and I've done that, and I've lost money on residential that way. I bought a property in Laredo, Texas, and this is great, and I carried that thing for 5 years, losing money every month, and had to come up with $40,000 to sell it. Totally out of my market first, totally out of what I was. I knew residential, but I didn't know residential in Texas, right? I mean, it's exactly right. We fell in love with, look at the cash flow. Well, if I would have bounced it off somebody like you or Mike, you would have said, oh, what are you, crazy? Having that third party to say, hey, yes, I had my wife at the time, but, again, you're in the same household, right? So having that third party to say, hey, what about this? What about that? Oh,
Yeah.
would have
Hey,
saved.
couple things. The other night I was on I did a presentation at OC RIA, so Orange County RIA. There was probably 100 people online, and there were three of us. First, there was economist Logan Masadi, I think his name is, pretty famous economist, been around for a lot of years. Really talked about where the markets are headed, and very optimistic outlook. Much more optimistic outlook than I've heard from some of the guys like at Marcus and Millichap or CBRE, the economists from there. But then I talked about due diligence and underwriting, and I talked for about 20 minutes, and I actually showed my tool and how my tool works. And this is a pretty robust underwriting tool that I've used for we've built it for 20 years, and really it changes all the time. It's a living document, right? And because something always changes. But it was interesting. I got hammered after the event for people asking me for it. So it occurred to me that so many people are trying to learn how to underwrite, how to underwrite effectively and be conservative in this market, that I thought, geez, maybe I should do a class. So I'm thinking I'm going to put together a class, give away the tool, and a 1 hour class. But here's what I'm going to do different: is the first part of the class, I'm going to teach people how to underwrite longhand by pencil and paper. Because I tell this story about how one of the first deals I did because I penciled it out. I wrote everything down. I went through 4 yellow notepads in like an hour to figure out a 10-year spread, right? And then I realized, shit, this deal doesn't work. Forget it. So it was a really good exercise, and I think people need to go through that exercise in order to get it. So if somebody listening is interested in an underwriting class, I'm gonna set something up. I'm probably gonna charge $25 for an hour and give the tool away. So direct message me on that. And then the other thing I just wanted to comment really quick is about falling in love. I tell this story, and I tell it in my book, right? Is I'm at a property in Dallas. It's early morning, spring morning. We're walking the property. The steam is just starting to roll off the swimming pool. The dew's on the grass. The landscaper, you can hear him in the distance. The smell of fresh cut grass. I'm carrying a cup of coffee. I'm walking with the property manager, and I'm falling in love. And I can't tell if I'm falling in love with the property or the property manager. And it's like, wow, this is really bad, but it's so classic, right? We get to a property, we go, oh my God, I want this. It's 350 units. This would be great in my portfolio. It's everything I pictured. But when you get into it, it's not right. And we shouldn't do stuff that's not right. Anyhow, let's hey Chris, welcome. Glad you're here this morning. I know that we invited a bunch of people this morning just to kind of throw an eclectic group of people together and have a conversation. Why don't you introduce yourself, tell people what you're about, and let's start there.
Sure. Thanks for having me, Mike. Hi, Carl, Pat, and Alex. I've been in the financial services business since, I don't know, the 80s. I've been in business for myself since the 70s. And Mike, what you were talking about as far as putting the pencil, do it longhand. When I started trading commodities in the late 70s, there weren't charts and computers. You just had to get a huge piece of graph paper. I mean, I had graph paper very wide, and I would do all my charting, and that's how I traded. And so it's no different. It's no different than evaluating a business or a stock or a piece of real estate, because if you don't understand the fundamentals, you're missing the boat. And so as we say in any kind of business, cash flow is king. So that really would be, it's got to work cash on cash, whatever your leverage is, and when I traded commodities, we had hyper leverage. And, the old saying is, how do you make $1 million trading commodities? We'll start with 10. So it can be the same thing in properties, because leverage is a double-edged sword, so put the pencil to it, make sure that you understand both the upside and the downside, because even today with the stock markets going crazy, it's a good idea to have a plan to say, what if we have another 1987, a tech bubble of 2000, the meltdown of 2008? How are you going to protect yourself? What's the worst case scenario? So if you can live with a worst case scenario and completely understand it on paper, then the upside will take care of itself, assuming you've done your homework.
Yep. Hey, Alex, are you available yet? Can you unmute or? All right, let me know if you get to unmute there and you want to introduce yourself, Alex. Glad that you're here this morning. Hey, listen, so you talked about 2008. What about 2001, right? 9/11, 2001. The markets kind of came off the charts then as well.
Right. Well, that's the issue of overvaluation, and it happens no matter what. I mean, at this point, you talked about Logan Biscotti, the economist, painting a rosy picture. Well, what if he's wrong? And I guess that's my question. What if everybody is wrong? And if you don't provide yourself some kind of an out or some kind of protection, that to me makes sense, whether it's the stock market or properties or whatever. So you have to be prepared for the worst case and, do whatever it is it's going to take to make sure that you are protected in some fashion. And that can be, again, leverage in a property situation, because I've done sold a lot of REITs and private placements and, properties in Chicago. There are companies that will hyper leverage because it makes the positive returns look great. And then there's other companies that will only do cash on cash, 100% cash. The returns are low, but your risk is mitigated that way. So there's got to be some balance in there to make sure that you can survive those bad markets.
Yeah, it's interesting. You bring up a couple good points, Chris. We just threw out some dates, right? And the reality is something is going to happen. I mean, you can just count on that, because every 8 to 12 years, depends what chart you look at, roughly 8 to 12 years, there's some cycle that happens in the economy or in the real estate, or it could be a black swan like this COVID. Unless you're a doctor or a immunologist, you probably wouldn't see this coming. And the reality is, for us that have been whether it's in the commodities business or real estate or whatever business you're in, if you're in it long enough, you'll start to see the cycles. And so that's one point I want to make. The other point is, your strategy. Listen, if you've got $1 million to lose and you don't mind betting it on red, go for it. But if you're not in that position and you're conservative with the risk factor or variable in your investing, then you better underwrite conservatively. And to Mike's point, I learned to be an underwriter from the bank's perspective, because I started off in banking and I started off in multifamily. So I was trained as an analyst, and I was trained to underwrite really conservatively, because the banks don't like taking bets. The banks like sure things or very low risk. They're extremely risk adverse. So when they underwrite a loan, which might be your property, they're going to do it very conservatively. And I think you can never learn that lesson too early. And if you don't know how to do it, Jesus Christ, invest $25 and spend an hour with Mike and get his tool and learn how to do it, because you are literally going to compress 30 years of mistakes into an hour of training. And my point is, underwriting it's the starting spot. It's if you can't underwrite the deal and quickly get rid of those deals. And Mike, I know you know what I'm talking about. You probably look at tens of deals a week. You eliminate the ones real quickly. And then you say, okay, now I'm going to really focus and underwrite these conservatively. And then you finally get to a deal. You might look at 100 memos or 100 offerings before you find one deal. And that's because you get really good at underwriting.
Yeah, you have to get good at it. And it's interesting because I coach people, and some people say, boy, I don't like this. And here's what I remember, right, is when I was in school, I hated math. And I could remember being a freshman in high school, looking at my math teacher going, Mr. Thomas, I will never need this shit. What will I ever? He goes, we don't know today, but we'll know sometime. And he was so right, because I didn't know, but here, in the business today, you have to be math over emotion. And I don't care if you're in the multifamily residential space. I don't care if you're in the stock market, if you're in, wherever you're at in business, you have to be math over emotion.
Yeah, absolutely. It's funny too that we have to look at history. And for those, that are listening that are fairly young, I remember I was just talking to my mom the other day. She's 89 years old, and she bought her a house in 1973, and the rates at that time were about 3.5%. That house she bought for $32,000. Now it's worth over $600,000. So obviously she did pretty well, but that's her main residence. And the thing that people forget is that I'll do a snap quiz here, guys. What was the prime rate in 1981? What was the highest that was ever gone to?
The prime rate?
The prime rate. 21 and a half, March of 1981. And it's funny because I actually have that Money magazine floating around my office somewhere. You could get a 18% money market back then, which sounds great, but by the time you take taxes and inflation out of it, you were still negative. And so,
so how do you hedge against it today? How do you hedge against it? Because it's coming, Well,
there's a lot of different ways that you can hedge against it. Obviously, keep your rent rolls full and keep increasing rents if you can do that. And if we go into an inflationary scenario, that would be the ultimate goal, because inflation can do very well for hard assets like real estate.
Yeah. So here it's not. Let me just say this real quick, Carl. It's not about it's about keeping it full. But there's such a housing shortage today that things are staying full. Here's what it's about: increasing rents. So be in a market that you can increase rents in. Okay. So as a sponsor today, I'm a guy, I put a deal together. I go out, I raise private equity. If you're looking for a place to put private equity, to hedge yourself against the coming inflation, go with a sponsor who's in a high rent growth market. Follow the smart money. The markets like Florida, Central and Southern Florida, Atlanta, Charlotte, Texas, the primary markets in Texas. So don't go, listen, I love Chicago. It's a great city. There's nothing like a bike ride in the summertime by the lakefront. But I'm telling you, it's not a place for rent growth at 2%,
Yeah. And the other thing I'd like to say about that, from the banker's perspective, I always used to tell people, because they always used to get tripped up on, oh, well, I'm afraid the interest rates are going to change and I'm going to get stuck without a chair. I said, well, and this is when I was lending when LIBOR was 2.5%. So they were putting, whatever, how many basis points on top of that. You could get a loan for, 4.5, 5, up to 7, depending on things. And I always used to tell them, I'd say, well, listen, the risk of, what's the risk of you losing out if the rate drops versus the risk of you losing out if the rate goes up, right? And what's the point? The point is, if you're comfortable with the rate that you've got and it's a low rate, don't worry about the rate going down a couple of points or not a couple of points, but a half a point or 3/4 of a point, and you missing the boat on locking it in at that. You should be more concerned about the rate bumping up 3, 4, 5, 6, 7%, because there's a higher probability of that happening than it dropping down lower. And so my point is, one of the ways to hedge against that is lock in long term. If you're buying a building, even if you're only going to keep it for 5 years, lock in a 15-year mortgage or a 30-year mortgage and make it assumable. Make sure that it's an assumable loan, because then that low rate, 5 years or 6 years down the road, when you want to sell it, if rates are high, but the buyer can come in and assume your loan at a lower rate, that adds value to the whole program. So, there's different ways of looking at, where we are today, because right now, like you said, Chris, I remember when interest rates were, 17, 18%, 16%, which is, if you told somebody that today, they'd freak out. They'd be like, what are you talking about? I can get a loan for 3.5%. I said, well, if I were you, I'd get it.
Hey, I went in the real estate business in 1991, and the guy in the office said to me, he goes, yeah, we're putting signs in the ground and they're getting 4 and 5 offers while the sign is still vibrating. from them installing the sign. And I was like, I wonder what that means. But boy, it didn't take me very long to figure out what it meant. And this is why I sold 79 houses my first 9 months in the business, because the market was so robust and I just got in front of it. I did the fundamentals every day. I mastered repetitious boredom, and I did it every single day. And in any business we're in, Chris, Pat, Carl, you do some other things in any business that we're in. If we do not master that repetitious boredom and do the things that most people are unwilling to do, we're not going to be. You can't be successful.
I think that's
No,
the
that's a
key,
great-
Mike, is you hit on the stuff right there. Most people want to get into real estate or multifamily, but they don't want to do the work, right? They don't want to do the demographics, go and find it. They want to invest where their waitress said that she's investing at, or a friend said, you know what I'm saying? I mean, I agree, and that's how you get in trouble. And that's why they go, well, where'd that building come from? Well, that started 2 years ago when somebody drove by there, did some demographics, or knew the path of progress and bought the property, 3 years before you even knew it was even available. But I think people especially today, it's lazy. Everybody wants to do real estate, but they don't really want to do real estate, right? It is hard work.
It reminds me, Earl Nightingale said one time, he said, successful people are willing to do what less successful people are not willing to do. And it's
Yep.
right to Mike's point. He said, it doesn't mean that they like doing it. They're just willing to do it. And, the other thing that came to mind when you said that, Mike, is Bob Proctor, who I worked with for years, used to say, it's never a question of ability. He said, if you find somebody that's done what you want to do, then you're able to do it as well. He said, it's never a question of ability. It's a question of willingness. Are you willing to put in the time? Are you willing to get educated? Are you willing to hang out where the successful people, hang out? And that's, that is the key. Listen, that's why you'll get 100 people to say, oh, I'm going to come to your training. And, 5% of those people show up. Those are the 5% of the people that are actually willing. The other 95% are the people that say, oh, I want to do it, but they don't ever take action. They're not really willing to do what's required.
Right.
Yeah. I mean,
Hey,
you
let's
can make
do
it
this.
free, and I've done that, offered free stuff, and they still balk at it, right? Well, like you said, oh yeah, I got 100 people coming. And like I said, 5% show up and they're like, well, okay. And then they're not participating, and it's like, but again, one of my mentors said to me a long time ago, the student's ready when the teacher will appear, right? I mean, you have to be ready for that, right?
Here's the numbers. I just spent some money on some marketing. I got 470 people to sign up for a free webinar. And out of 450, and it wasn't like one time, it was over 4 nights, right? 4 different times, 470 people, 34 people actually showed up. So it's amazing. I don't think people, unless people are committed, and committed to, a lot of times it means financially. So, I can give you that spreadsheet for free, but if I don't teach you how to use it, you're going to blow it up. Here, listen, the simple rule is this: change only the blue numbers. If you change the black, you blow it up. Change the blue numbers, the black is your result. Math over emotion. Let's not get over our skis, right? Hey, listen, here's what I want to know. Where were you guys on 9/11?
I was working for a company. It was before I got into banking. It was a company that we used to do feasibility studies for companies that were either selling or companies that were buying other companies. And this is for people in Illinois. Remember, Illinois Machine Tool was gobbling up all these little machine shops. So we would go out and we would analyze these companies, and I would spend all over the Midwest, by the way. So I was on the floor. I was working for a guy that was a Navy SEAL. He was a real badass, pardon my French. And I remember we had to be there at 6:45 every morning. That was the deal. And we were all already ready to go, and we're watching the TVs, and like pandemonium broke out. We couldn't believe it. So that's where I was.
Yeah, I was working from home at the time when the real estate business, walked out of my office and I had CNBC on the corner TV, and I'm like, oh my gosh, what's going on? So My ex-wife and I stood there. We're just like, oh my God, what's happening? So total shock and dismay.
And I was driving my son Alex to school. He was in the 8th grade, I think. And I heard it on the radio, and because they said a plane crashed into the World Trade Center. And I thought, well, it must be, foggy or whatever, because I remember there was a B-24 or B-17 or something years ago that crashed in the Empire State Building. And I thought, well, it's probably, bad weather, and that's a bummer. And then my sister-in-law called me and said, did you see it? And I was in the car, obviously. I said, no. I said, a jet purposely went into one of the Twin Towers. And I had just flown back from Boston the day before, and just was, devastating, everything on the TV, and it was just horrible.
Yeah, I remember that was the thing. Remember, the second plane didn't hit for like another, 20 minutes or half an hour or something?
It was like 20 minutes. Hey, I heard this morning that they just found 2 more sets of remains at Ground Zero. Yesterday, that they just found 2 more sets of remains yesterday. So, this day rolls around. It's always a solemn day. And, it's interesting. I remember I was, I had left the real estate business for a while. I was kind of burnt out. I went back into construction business, and I was selling room additions with a guy. And I was standing in the doorway it was like 10 to 9, knocking on a door of this house to go on an appointment. And the woman comes to the door in tears, and she said, my husband was just on that plane. And I said, what plane? Wow. She goes, the plane that crashed I said, what? And she invited me in, and we stood there in her living room for like 40 minutes.
Oh my God.
And I never heard from her again. I left, but I went back to the office, and I sat in my office. I couldn't believe what was happening. It was crazy.
Yeah. And I mean, terrible thing. And it amazes me how something like that's required to bring the country together. Remember how the country came together? There's a company out there that sells t-shirts. It's called 912. And they talk about how the country came together. Like, we forgot about all our differences. We forgot about all this BS that we hear about in the news today. We really came together as a country. You know what I mean? We were unified and galvanized by this terrible thing that happened to us. And it just blows me away that we have to wait for something like that, right? Or be
even
reminded.
The politicians were, because remember, they stood on the steps of the Capitol building and they were all arm in arm and all that stuff. But you're right, Carl. It's like, why do we have to wait for something like that to, just outside forces hitting us, compared to let's get things fixed inside for ourselves, right?
Yeah. Somebody on Facebook said they were feeding their newborn on his lap, watching Channel 9 News, and watched live the second plane crash into the tower. Wow. Another guy said he was in a trench putting in a water main in the city of East Grand Forks. It's amazing that you remember. Do you remember where you were 2 weeks ago on Tuesday night?
I don't remember what I had for breakfast this morning.
Good point. Yeah, I can't even. Thank you, Chris. That was what I was going to say. I don't know what the heck I had for breakfast this morning.
Right.
Hey, I just want to say, if anybody's out on Facebook and they want to join us on Zoom, DM me. I'll send you a link. You could jump on with us. We had a couple technical glitches this morning, but if you want to be here and comment or say something, or if you want to throw something in the chat, we'll read it. So glad that everybody's here this morning. We got a house full out on Facebook, and so nice.
Guys, you were talking about the demographics, and Pat, you mentioned demographics when you're looking at your deal. But in the big picture, I think, Mike, you hit the nail on the head as far as rent growths go. If you think about it, baby boomers from 1946 to 1964. In 2011, they started turning, I should say not they, because I'm one of them.
I was going to say we.
Yeah, we started turning 65, and every day, 10,000 people turn 65. I'll be 65 in December, So And you think about where you want to live. And when it's, I'm in Minneapolis, when it's 25 below and the wind's blowing 30 miles an hour, that's not a whole lot of fun. I don't care. I'm still not going to go play hockey outside.
You're out there in your shorts. Don't kid yourself. You're out there playing hockey.
Not anymore, And so, the beach in Fort Myers or wherever, Tampa area, it looks pretty good, And if I can get a nice place, because now people go on fixed income, you have to make your money last. And so that's one of the things that I see with my clients when we're doing, Darlene and I are doing financial planning. What kind of quality of life do you want? Do you want to be out there humping, 3 feet of snow out of your driveway? Or do you want to relax and have, a cocktail sitting on your balcony, looking out over the Gulf? That's not a very tough sell. So that's one of the issues that we look at globally as far as what the demographics are in this country and where you should be going to make sure your rents are going to grow.
Well, and you bring up a good point, Chris. When people start to flood into an area, like I'm looking at buying a place down in Florida as well, and that's one of the things. When even if they're empty nesters or boomers or whatever, when they start moving in, and there's the stock of real estate is relatively stable. It usually takes there's usually a 5-year swing. Before from the time a building is planned till the time it's actually occupied, right? It's about 5 years depending where you are. So my point is, if within that 5-year period there's a flood of people coming in, then what's going to happen to the current stock? It's going to fill up, supply and demand. So prices are going to go up. It doesn't really matter if they're baby boomers or they're who they are. If they're moving into a general area and there's population growth, that means your rents are going to go up because you just you have a higher demand than you do for supply. So that's a very important point that you make there.
Hey, I got an apartment you could rent in Florida.
Really? Do we get the Zoom deal?
Huh? Oh, you'll get a Zoom deal, all right.
Yeah.
You'll get the one you're buying, Mike?
Yeah.
Yeah. It's in Tampa, actually.
Never trust a gentleman on Zoom offering apartments or condos. That's
in Florida.
Hey, now.
There's some gators there that.
I'm just saying.
Shooting yourself in the foot, Pat. Shooting yourself in the foot.
He's got a bridge. He's got a bridge and some raw land to go along with that too.
There you go.
That's in Australia.
You are all over. My goodness, you are just all over, man.
I'm a mess.
Well, one of the other things too that you were talking about, you had 470 people signed up and 34 showed. I think one of the problems that we have in our society today is instant gratification. I mean, if you think about it, when we were kids, we didn't have computers and all that stuff. And, I sound like an old man, which I am, but you can get anything on Google, and so to wait for, people want it now. They don't want it now. They want it right now. And I think that's one of the problems that we have is that people just don't want to do the work because so many times the advertising says you can, look younger, be smarter, be stronger, take this pill, do this thing, and it's instant, and I think that's unrealistic, but that's the way the country has gone. And, you can get instant news on your phone. You're carrying around a computer that, I remember back in grade school, a math teacher came along and he had a calculator, added, multiplied, divided, subtracted, and he paid like $1,400 for it. So it was like $69 or $70 or something like that. And he was just thrilled with it. Well, you think about the computer you hold in your hand, that does more work than the IBM computers of the 60s that took up an entire room. So you can do so many things, and that's the problem. It's instant gratification. You can swipe right or left and find your mate. You can, trade stocks or whatever, and people just don't want to put the work in. Let's buy Bitcoin and we'll make $1 gazillion on some cryptocurrency. So that's the mentality that we're fighting. And,
I think the other thing, Chris, that's a good point. I think the other thing is, I think they think that once they sign up, that they're going to get the benefit. You know, I mean, I'll never forget. I had a woman one time when I was coaching real estate, which I don't do per se anymore. I do more mindset stuff. But I remember I was interviewing her, and we were going to do a one-on-one program, and she was going to spend a lot of money. And I asked her, I said, well, how many of the programs have you done? She goes, oh, I've been doing programs for years. She goes, I've done probably 10 or 12 programs. I mean, she did Carlton Sheets. She did Dave Delvato. She did John Desmeyer. I mean, she did all these programs. And I said, well, how much property do you own? She goes, oh, I haven't bought any property yet. She goes, I'm still studying. And I literally told her, I said, you know what? I forget what her name was. I said, you're not going to join my class. I said, my suggestion to you is to go and take the information you got and get into action. So what's my point? My point is, I think a lot of people, once they click on that button that say, oh, I'm going to go to this course, they think that they get the benefit of going and they don't have to show up, which is really just bizarre to me.
Hey, you know,
I've met those people too at conferences, and then you see the same guy every year. Like you said, well, I'm thinking about it. We're researching. I'm like, I bought 5 properties, or, you know, and the market shifted. And now all of a sudden that market he was looking at, oh yeah, you know, it shifted. Well, yeah, if you would have in the market and been doing it, you would have seen that shift instead of outside looking in the glass, you know, from the outside. Oh,
probably would have seen it coming. Hey, I'll never forget this. We used to do when Donald Trump did his expos. He did for like 2 years. He did one in Chicago, LA, Dallas, and when he did those, I remember being at one in Chicago. We had a booth, and I was taking a break, and I went and sat down on a bench, and I sat down next to this guy. He had these 2 shopping bags by his feet, just full of books and tapes, and I said, wow, I said, you're really going to get into it, huh? He said, he goes, yeah, right now I'm trying to figure out how I'm going to go home, tell my wife I spent another $5,000. And I thought, man, that's classic, right? People just don't get into action. And that's what I tell people I coach all the time. And I know you do too, Carl, is look, you have to take the knowledge is only a little bit of it, right? You got to grab the knowledge and then put it into action. And that's what I try to do is hold people accountable. So
paralysis by analysis is a huge problem.
Yeah. And the other thing is, I tell people, take action every day. Just do something little every day. I'm involved with some of these guys, a startup. They brought me in as a partner. There's 4 founders. And I said, listen, guys, we just have to make a little bit of progress every day. You know, I'm doing the marketing and sales, and other guys doing the finances, and other guys doing the creative side of it. And then there's a technology guy. I said, listen, we're going to meet twice a week, you know, on Zoom, because one guy's in Brazil. And my point is, I said, all I want to see, guys, is progress every day. Just do something every day, right? And then that will make a big difference. And I think that's a big problem for people. They just, you know, they think that they're doing something, but they're not actually, you know, getting into action and taking the direction that they're getting from their coach or their trainer or whoever.
Well, that's, again, goal planning with the end in mind first. Right, Mike?
Yeah, absolutely. You have to think about what the end is, you know. And somebody said to me the other day, why do you talk so much about exit plan? And I said, because nobody else does. And I said, because you have to know where you're going to maximize your profit. I can do a 10-year run on a property, and if I don't know that at year 6 or 7 or at 5.5, that's the maximum point of profitability on that deal, because we get to a point and then it comes back down. So if you look at any 10-year spread, it's going to show you that. Why not capitalize on that profitability at that point and then run the deal another few years?
Well, and the other thing, it's like going to the airport and go. I mean, we don't do this anymore. We used to go to the airport to buy a ticket. You go up to the ticket counter and you say, just give me a ticket anywhere. You know, the person behind the counter the first time would laugh at you and go, oh, that's funny. And if you said, no, seriously, just give me a ticket anywhere. I mean, you say it 3 times, they're calling security. You know what I mean? The point is, if you don't know where you're going, how in the hell are you ever going to get there? And that's the exit. The exit in real estate is your destination. If you don't know, you know, go to Priceline and they're going to ask you, where do you want to go? You know what I mean? Where are you starting from and where are you going to go? They don't do that just because they're curious. They need to know what your plan is, how you know, what airline you're going to take, what plane you're going to take, you know, all that stuff. So that destination in real estate is the exit, right? And, you Mike, I know I've heard you say this 100 times, right? When you lock in your profit when you buy the property, you realize it when you exit. And that's why the exit's so important. That's where you realize, your gain or your profit. If you don't know where that is, you're lost.
Sure. People always they say, hey, you make your money when you buy the deal. And that's right. You do. Depending on your terms, depending on how you buy it, you make your money up front, but you don't realize it till you sell it. So, how do you get to that place, right?
And that's
also
part of
having that's why the windshield's so big, right? Compared to the backlight or the rearview mirror. I mean, if you don't have a goal on your wall, and mine's right on my wall, I look at it every day of, okay, I want to do this by this date. That's going to go back and drive, like Carl was talking, those steps every day. Okay, am I just being busy or am I being productive, right? Because I know people, and I've been there too, gotten that trap of, I'm busy. Well, what are you busy doing? Is that moving me forward to my goal of 1,000 units or 2,000, whatever it is, every day? Is that picking the phone and calling a broker? Is that picking up and calling Mike for counseling? You got to have that kind of goal, because if you don't, you'll be like that guy with the shopping bags. He's more worried about telling his wife a story of why, instead of saying, honey, I can make this money back on our first deal. You just let me go do this. I know it's a lot of money, and by the time the bill comes in, I'll have a house. Oh no, they're looking at a totally reverse. Oh my God, how am I going to tell her? I mean,
Pat, where did you come up with that? I love that, the windshield versus the rearview mirror.
Did you hear the mirror? I've heard it a few times.
Well, I'm going to give you credit for it. When I use it, I'm giving you credit for it.
Well, thank you. You don't have to, but thank you.
Well, I'm going to anyway. But that's a great analogy. That's a great analogy. Most people are looking in the rearview mirror.
Yeah.
And what happens? What happens? You're gonna crash your vehicle, and real estate is nothing more than a vehicle. I mean, Chris, this. It's a vehicle. It's not the only vehicle to financial wealth. And if you're not focused on the right thing, even a Maserati or a Ferrari will crash if you don't know how to manage the thing or drive the thing. Or if you know how to drive the thing, but you're focusing on the rearview mirror, eventually you're going to run into the guy ahead of you.
Mm-hmm.
It's how you use that tool. And you're right, Carl, it doesn't matter what vehicle it is, but like I say, you can use a hammer to build great things, but you can also use it to kill somebody. So how you use it is highly important. And so the other thing, when I've been a trader for forever, and I always say, people ask me, what's the key to trading? And it doesn't matter if you're trading real estate or stocks or commodities or whatever, but the most important piece is the exit. Because there's, Pat, like you said, you had a property that you held on for 5 years, and you probably wish you just would have cut your losses right away. It's the same thing. You have to look at how you're going to exit from a bad standpoint, and also from what's my upside, and is that going to get me to the quality of life that I'm looking at? And I think that's really important, to focus on what you want in your life and have your goals written like I do right here on my whiteboard, and like you do, Pat and Carl and Mike, I'm sure you do too. So, but take some action. If you sit around and, again, get instant gratification from watching ridiculousness on TV, you're going nowhere except backwards.
Remember that show? That's all they ever watched. It's crazy.
Yeah.
What show? What are you talking
Ridiculous.
about?
Ridiculousn's.
Was that a show? Really?
People, yeah, it was, my kids watched it. It was a guy that, his name was Rob Deerdeck, and he was a skateboarder. And it started because he started showing videos of people doing a face plant, so maybe we should do and it progressed to all stupid videos, people doing really stupid things. But
the girl,
maybe that would be a show that you can do, Mike, is all the nightmare stories of people that can, and learn from those lessons. And that's the point. How do you learn from your lessons?
The problem is that most people don't want to talk about them. See, everybody thinks, oh, it's success, it's great, and you listen, check around in the space. There's very, very few people that are talking about the challenges that they've had to scale, to get to the next level.
Everybody's an overnight success, Mike. I took a course. I didn't know how to spell real estate yesterday, but I own 5,000 units now. You're like, yeah. Those podcasts just drive me nuts. I'm like, okay, But it's not an overnight success. It's working not only in the business, but also working on yourself. Like you talked about, Carl, mindset, getting out of that slump. I've been there. Hey, I've had to commit myself. Hey, let's go to the office today. Let's do something different today. You're going to have those days. It's not going to be sunshine and rainbows, but when you get those days, you go, this stuff works. This is awesome. But you're also going to have days that it's just not going to work, but you have to work through that. Right.
Listen, I've talked to people, that have come up and say, oh, well, what happened in 2008? There's some stuff out on the internet about, I said, yeah, we had a few foreclosures. And you know what I always tell them? I'm like, listen, if you're going into battle, would you rather go into battle with a knight that's got no kinks in his armor, that's never been to battle before? Or would you rather go into battle with a guy that's got the scars, the wounds, the stories, and the kinks in his armor? Because that's me. I can tell you, I actually remember more of my failures than I do of my successes, because it's the fights you lose that you remember, not the ones you win.
So Tom Ferry on Tom Ferry TV does his deal in his office, and on the back wall he says there's strength in the struggle, and that's so true. That's where we grow. We grow in the struggle. We grow in that piece that most people don't want to talk about. And I'm embarrassed. It's my but you know what? Listen, here's where it really clicked for me. I was doing a podcast about a year ago. It was on Abel Pacheco's podcast, and somebody said to me, I told my story, I told everything that happened. I've had this success, I've lost everything, and I tell my whole story, and this guy says, hey, are you raising money again? I said, not yet. He goes, let me know when you are, because I wouldn't want to be with anybody else, because they haven't made the mistakes you've made. And your mistakes show me that you're not going to do it again. And it was like a light switch went off, and I went, holy cow.
Well, that's wisdom, right? That's wisdom that comes with that, right? The guy's gone out and bought homes and lost a couple here or there, had to, scrape together pop cans, put the mortgage together. He'll come up with creative ideas to do next time to not have that happen, compared to, oh, I've never lost any money. Really? You've been in real estate for how long? Either you're lying to yourself or you're lying to me, because I know I bought deals that I lost my butt on. But again, I've learned so much on that okay, I'm not going to do that again, right? Okay, that hurt. I'm not going to go in that area. I'm not going to go in that type of house or whatever. And you learn from that. You have to learn.
Hey, Mark says out on Facebook, he said, Moose nailed it. I want kinks in the armor. So true, right? Hey, listen, guys, we're rolling up on an hour here. I mean, this time went fast this morning. Any last comments, thoughts?
Yeah. I mean, I just really want to circle back and today is going to be a day of, I'm going to stop more than once today and just be silent and really think about. I had a couple people, a friend of ours' daughter passed away. She was a young gal that just started working at one of the investment firms. A guy named Ace Bailey was on the plane that I played hockey, that I knew from playing hockey. He was a Hall of Famer, and he was on the plane. He was an agent. He was on his way out to LA. I think that plane crashed in Pennsylvania or whatever. So yeah, I mean, it's 9/11. I just hope that 20 years later people can look at this and remember how we came together and start to come together on some of these issues. So that's all I have to say.
Yeah, no, I agree, and you're right. It is one of those days. Let's remember people from that day, from that era, and first responders. I mean, these are people that are in the front lines, whether was that or whether it's, I got a friend, she's in the service, and I didn't hear from her for a couple of days, and she said, oh man, we had something happen, and they can't talk about that stuff, but those first responders are the people that are out there and really are looking out for our best interests. So thank you to those people, the firefighters, the police, people that make our lives exist. So, hey Pat, why don't you tell people how they can get a hold of you and why they should get a hold of you and
why should they? Well, my website is opportunitycreator.com.
There you go.
And you can email me at pat@opportunitycreator.com. We're a private equity firm looking for deals and deals in Iowa and Michigan. We've got a couple under LOI right now, so that's good. So if you're looking for a passive investment, give me a holler. Give me a holler. If you want to just talk, give me a holler as well. So it's pat@opportunitycreator.com. And thank you very much for the opportunity, Mike.
Hey, Pat, one of my coaching clients has a deal, a couple hundred units, I think, coming up in Iowa. He doesn't want the deal. He wants to find somebody to buy the deal.
Okay.
Let me connect you. I'll connect you with Nolan, and you guys can see what you can work
That'd
out.
be great. We're looking at a deal in South or West Des Moines right now, and another one in Cedar Rapids. So yeah, we're in that area. So yeah, that'd be great. Thank you. Appreciate the opportunity. This is great talking to you guys too.
Yeah. Hey, Chris, how about you? How do people get a hold of you? And
Sure. I can be reached at Munson Financial. It's chris@munsonfinancial.com, MUNSON. Our deal really is tax-free income. Whether you own real estate or any investment portfolio, taxes are going to go up. We know that. President said it. So if you want to have a quality of life where you don't have to worry about paying taxes, give us a call or shoot me an email.
yeah. I just want to make a comment. I just want to thank Eddie for being out on Facebook this morning and the kind words he's had to say. I appreciate it. Mark, thanks for being here. Larry, Bill, good to see you guys this morning. Anybody else that's out there that hasn't checked in that I'm not sure of, thank you. Alex, thanks for being here this morning. Hey, it's always an honor to be here on Saturday morning. I appreciate you guys. I always appreciate you guys checking in and being part of this. And Carl, how about you? How do people get a hold of you?
Yeah, you can text me at 312-856-5140. I put that in the chat, and then my website is Your Focus Guy, and you can connect with me on social media. I'm either find me under C. Gordon Moose or Your Focus Guy.
We got to learn how to do what Pat just did there. Look at that, man. That's slick.
Sorry about that. I leave that for the last.
Hey, Pat, did you get my info on the event coming up?
Yes, I did. Thank you.
Yeah. Do we need to talk on that offline or?
Yeah, I'll connect with you. I got to connect with the other gentleman as well. I've been so busy here, but yes, definitely.
And then we should, I'll get you connected with Nolan on that.
That'd be great. Thank you. This is great. Thank you for putting this on, Mike. I really appreciate it. This has been very educational, and this is awesome networking.
Yeah. Hey, I have a new toy. It's LinkedIn Live. So Mondays and Wednesdays, you may find me for a quick rant on LinkedIn Live. If anybody ever wants to join me during the week for that, let me know. And I will have you on as a guest, and we'll just kick the can around a little bit and see where the conversation goes. You guys know me. I like unscripted stuff. So, hey, Mike with My Core Intentions, thanks for being here this morning, everybody. It's always a pleasure. I love that we can bring some content and relevant information to people that it could maybe enhance their life and make things a little bit better for them. So if you need to get a hold of me, you can reach me at mycoreintentions.com or mike@mycoreintentions.com. And wherever you live out on social media, you will find me as well. I subscribe to all that stuff and have as much content out there as I can. So appreciate you guys. Have a wonderful weekend, a great day, and we'll catch up with everybody soon. Thanks for being here.
Thank you, Mike. See you guys.
Okay, guys, thanks for showing up.